Hey guys, hi, Anthony Nitz here, and I want to just deliver a little nugget to you about FHA loan holders. I've been told by our lenders that we work with that several of our people are seeing increases in significant. I'm sorry, wait a second. Hang on a second. I want to. But yeah, so several of our lenders have seen an increase in submission on FHA Streamline Refinances. I just want to share with you a couple little tips real quick. When you run credit, just run it with the mortgage only score. So this is kind of a cool thing for you guys because I know some of you might have like car payments and all kinds of other bills and things like that in there. They don't want to see that. All they want to see is the mortgage only score. This is part of the streamline part of doing this type of refinance. They just don't need they don't need it, just the mortgage only with your scores. Your scores have to be qualifying, of course. And then you have to have a net tangible benefit. What that means is you can't just get a refinance just for the sake of refinancing. You actually have to have a drop of at least 0.5% in your interest rate from what you currently have. So if the rate, for example, is 4.5%, the rate has to drop down to 4%. Okay, that way your payment goes down, and depending on how long you've already been paying on your loan, your payment goes down even more. So there has to be a benefit. Again, you can't just do it just for the sake of doing it, which is good. You want to decrease your pay or your monthly mortgage amount. And then something you need to know though is that you cannot roll in closing costs, because there are still closing costs associated with the loan. Other than the prepaid interest, you can't roll in any other fees or impounds into the loan. Those closing costs either have to be a credit to you, the borrower, or you have to bring it in at closing. In other words, you got to bring in a check, right? But that's not fun. But here's the good news. The lenders that I work with, they'll usually credit all the closing costs minus the impounds. Okay, so they'll give you a credit, cover all those closing costs minus the impounds. The impounds, like taxes and insurance, that does have to be paid by you directly as part of the loan process. So you will have to write a check for that. But here's why, is because you will get a refund from your current lender when that loan is paid off to start your new loan. Okay. For example, any reserves that they've accumulated to pay towards taxes or insurance, that'll get refunded to you because they take it out every single month on your mortgage statement. Just put it aside in an account. That chunk of money gets sent back to you. But in the meantime, that has to be paid to the new loan. So just be prepared for that, so you don't get caught off guard on that. But it's still, it could be saving you a lot of money on your monthly payment. And let's see what else. Guys, these loans are super easy to do. They're super, super easy to do. And it's a great way to decrease your monthly mortgage payment. Here's a couple of things that you're going to need. If you want to do a streamlined refinance, these are a couple of things that you want to need, or that you're going to need. You're going to need, make sure that you have paid your mortgage on time for the last 12 months minimum. And what that means, it doesn't mean, oh, I was late a few days on my mortgage. It means as long as you didn't miss a mortgage payment, as long as you weren't 30 days or more late on your mortgage, then then you're fine. Okay. If it was just a few days late, that doesn't matter. They just want to make sure you're not missing mortgage payments. Okay. You'll need a recent mortgage statement, obviously, because the lender needs the new loan information. You'll need an insurance declaration page. If you own a home, you'll get that from your insurance company, or you might have it on hand. Or if you're in a condo, you might get that from your homeowners association. You need a utility bill. Why? Because that proves that you actually live there. This FHA Streamline refinances are for owner-occupied properties only. And then you're going to need your mortgage note. Okay, actually the actual note, because they need to know the terms and whatnot before they pay that off. So that's it, guys. It's really, really a good, simple thing to do. Like I said, the lenders that I work with, they will credit you guys the closing costs if you ended up working with them. If you like to see if you can qualify to get an FHA Streamline loan, just send me a message. Send me a message. I'll connect you with one of those lenders that I work with, because I know they do a really good job, and they're good at what they do, and they can help you out. So I hope this is helpful to you, and otherwise we will be talking to you real soon in our next live. Take care.